So gold bullion, one of today's fastest growing investment opportunities from Premex, the Precious Metals Exchange Company. The retail value is determined at the close of business on the day of taping. Joyce, what was that retail value?
This episode of Price is Right was recorded in June of 1980. This episode also happens to be the one where Vanna White was on as a contestant before she got famous. Now, the very interesting part of this gold bar being up for bids when they have the 4 contestants bidding on the item is what the bids were.
$325. Vanna?
$495.
$495. Jackson?
$497.
$497. Richard?
$498.
$498. Now, the actual retail price is $508. You win, Richard.
A retail price of $508. Now, that was the second round of bidding because the first time through, they all overbid. But the person who actually won the bid on the second round was only $2 off in his first bid. And if you noticed, he was really close in this one as well. Another thing you'll notice is that 3 of the 4 people that bid were really close. In fact, they were outbidding each other by just a little bit each time. In other words, back then, people were much more in tune with what the value of gold and silver was, because in 1980, we were not that far removed from gold and silver still being considered real money.
Tell the folks what you do for a living.
We buy and sell precious metals.
A couple of weeks ago, I had a...
Did you see that? Take a look again. This clip is from David Letterman in April of 1989 for his birthday, when he received a gift and he went to a precious metals dealer to see what it was actually worth. On the wall, they actually showed the spot price of gold and silver. And that spot price of $381.50 for 1 ounce of gold back then and $5.74 for an ounce of silver means that they had a gold to silver ratio at that time of April 1989 of 67-1. And what your gold to silver ratio is basically at spot price, no premiums, no retail price included, how much silver you could buy with the same money it would cost you to buy 1 ounce of gold. So in this example, like I said, that means that your money could buy you either 67 ounces of silver or 1 ounce of gold, if that's exactly how much money that you had. But what does that look like today? Well, to get that number for today's gold to silver ratio, we simply need to take today's gold spot price and divide it by today's silver price. Now, I went ahead and did that for you, so let me show you how that comes out. Let's move this to the side. We have to remove 3 1 ounce silver rounds, leaving us with 64-1, but that's not actually accurate. After removing those 3 rounds, we need to add 20 ounces of silver. And that means that today's gold to silver ratio is 84-1. The money that it would take you to buy 1 ounce of gold at spot price could buy you 84 ounces of silver. Now, of course, we can take a look at our historic gold to silver ratios. This chart right here over on SD Bullion's website goes back to around 1993, about June 1993. And you can see right now, today it's showing 83.68. Like I said, around 84. It goes up, it goes down. Historically, you can see if you're looking at this chart here, for the most part, that's a pretty high number. Of course, there are dips. You can see right here in 2021 where it dipped down into the 60s. But for the most part, if you look at these numbers, there's almost really nothing over 80-1. Right now, we're sitting at 83-1. And you might be thinking to yourself, why does that even matter? Well, it absolutely matters, at least to me. There will be people that say they don't pay attention to the gold to silver ratio and it's basically junk, and that's fine for them to have that opinion. But gold to silver ratio tells me a lot about when and what I want to put my money in. And what it tells me is that, let's say I wanted to take a couple $1,000s to invest or to stack into silver and gold to throw it into my deep stack. Which one should I buy? Well, if gold is sitting at 83 or 84-1 with silver, and I'm used to it being in the 60s or even the 70s, there's 2 things that need to happen for it to get back to that 60s or 70s. The first thing is the value of gold needs to go down so that it meets the 70-1, 73-1, whatever it is, gold to silver ratio, or the value of silver needs to go up. Now, in either of those 2 scenarios, you win with silver. Now, both of those could be wrong, and the value of gold could go up and the value of silver could go down. I'm not saying I have a crystal ball. This is just why I look at it that way, because if I do believe in that ratio, then that means I believe that if it's going to get the 70, anything over 70, you should really be going into silver, and anything under 70, you should be really going into gold. Now, of course, like I said, I don't have a crystal ball, and if your intent with buying silver and gold, with stacking silver and gold, is just to turn it into more fiat currency later, maybe it's not the right thing to be in anyway. There are definitely better avenues out there to invest your money in that could produce bigger returns. The whole idea of gold and silver is just to get your money out of the fiat system at all. To me, it's a savings account. It's a savings account that isn't in the US dollar. If you're just trying to guess the market and make a bunch of money, you may as well just ask a Magic 8 Ball. Oh, Magic 8 Ball, is it a good time to buy gold and silver? Let's shake it and find out. It is certain. At least we know the Magic 8 Ball says that it's a good time to buy gold and silver. Now, this entire time that we've been talking about the gold to silver ratio, we've been looking at it just based on spot price, not necessarily with the premiums. And many people will tell you, and I agree 100%, so I'm going to tell you right now, is that the premiums on gold and silver absolutely matter whenever you have to buy your gold and silver. Right now, if you were to go out and buy a 1 ounce gold eagle, you might pay $80 to $90 an ounce over spot. You might be able to get it a little bit cheaper. 1 ounce round you can get for around $1.50 to $2 an ounce over spot, depending on where you buy it. So that means if you were to buy 84 ounces of silver and you had to pay $2 an ounce over spot, you actually paid a premium of $168, which is significantly more than the $70 to $80 to maybe $90 an ounce you'll pay for a 1 ounce gold eagle. So if we go ahead and take a look at current spot prices, you can see we have gold at $23.72 and silver at $28.26. If we add those premiums and do the math, we can take our $24.62, which is basically spot plus 90 for a 1 ounce gold eagle, and then divide it by 30.26, which is spot plus 2 for 1 ounce rounds, leaving us with roughly a gold to silver ratio with premium at 81.36. And if you're wondering why I'm comparing the premium on a 1 ounce gold eagle, which generally has a higher premium, versus generic silver rounds and bars, which generally have lower premiums, that's because right now the premium difference between a gold eagle and a 1 ounce gold bar is around 1% of spot. Yes, around $25. And honestly, granted, everyone makes their own decision, but if I were to go out and buy 1 ounce of gold today when it's over $2,400, for just $25 more, you get a 1 ounce American gold eagle or over a generic gold bar, I'd go with the gold eagle. Of course, you make that decision, but I think that makes it a pretty fair comparison. Now, as confusing as it might have been for me to throw you for a loop and show you what the retail gold to silver ratio is, I'm going to add even more to make it even more confusing. Did you know, and I'm sure that you do, that you don't necessarily have to buy a 1 ounce gold coin all at the same time or a full ounce of gold all at once? Yep, that's correct. You can actually buy fractional gold, and with even gold eagles, you can buy them as small as 1/10 ounce of gold. So these 10 coins have the same amount of gold as my 1 ounce gold eagle right here. The difference is that the premium on these gold coins are significantly higher than this. And what I mean by that is if you were to buy 10 of these instead of 1 of these, you would pay somewhere between $100 to $150 more for 1 ounce of gold just by getting it fractional instead of 1 full ounce at once. So what we're actually looking at here is fractioning out your gold into silver instead of buying just fractional gold. In my opinion, if you're going to work on fractional gold, that's where silver really shines. That's where I love to stack silver, because I look at gold as something that primarily I want to have the bigger pieces for the bigger barter and trade transactions if we ever do get there. And no, I'm not a prepper. I'm not saying that we're going to, but let's just say it happens. That's what this is for. And this is for your smaller transactions, like going to the grocery store to get bread, milk, and eggs. So I hope that I didn't confuse you too much, and I ultimately hope that you see why I believe that when the gold to silver ratio is far apart, that I'm much more interested in silver, but also that I opened your eyes to the gold to silver ratio at all and why I look at that. And I also, of course, talked about why I believe in stacking silver. If you learned anything at all today, do me a favor, hit the like button and let me know with a comment down below. And don't forget to subscribe so you don't miss out on future videos like this. Now, I'm going to put a video up here, and if you haven't seen it yet, you should definitely go check it out. It's where a coin dealer that I spoke to just the other day said that people might be afraid to buy silver right now. Guys, thank you so much for watching, and we'll see you next time.